So in this video, I want to talk about what I think is the biggest mistake that Robinhood users make when buying and selling stocks. All right, so like I said, I want to walk through the biggest mistake that I think Robinhood users make when buying and selling stocks. There's another video on my channel where I walk through the 4 or 5 things that I like about Robinhood and 4 or 5 things that I don't like about Robinhood. I highly encourage you to check that out if you haven't already. There's some real good nuggets of information in there. One of the things that kind of leads into what I'm talking about today is that the Robinhood kind of sends out these IPO alerts, where they really try and get people on the bandwagon with buying, stocks as their stock is first being listed. They also will send out alerts with recent information about trends or hot stocks, and it frustrates me at times because people latch onto that information, or they see things in the news. There may be a hot stock like Bed Bath & Beyond, or what was the other one? AMC. GameStop was one, that craze that went on a year or so ago, where people just started jumping in and not really knowing what they were doing because they heard, oh, the stock's going to shoot up, the stock's going to drop, you should do this or that, and it really gets people in trouble a lot of times. And that's really what leads me into the biggest issue I see with Robinhood traders, is they don't understand capital gains taxes. Now, I am not an accountant, I'm not a lawyer, I'm not an expert, and I want to make that very clear that you need to talk to your accountant when it comes to your specific tax situation. But I do want to briefly talk about capital gains taxes and what it can mean for your stock trading. So let's go over to my computer real quick and show you a couple things. So we're at my computer now, and if you're really bored, you can go into IRS topic 409, capital gains and losses, and read all about short and long-term capital gains. Now, basically what this means is the government's going to tax you when you generate profit with your trading. But there's 2 different kind of brackets that you fall into, either short-term or long-term. And most people don't realize that they really need to pay attention to this, especially if you're buying, large quantities of stocks. And again, if you're taking a loss on those stocks, meaning you didn't make any profit and you lost money, then this really doesn't apply. So this is only if you are actually generating a profit from your trading. A lot of people, what they do is they get on these trends and they'll buy a stock, buy 10 shares of something. It goes up a certain amount and they think, woohoo, I made, 20% profit. Well, you forgot about capital gains taxes, and you have to pay attention to the short-term versus long-term. And I'm going to show you a couple of charts in just a second here. Essentially, in order to avoid short-term tax rates, you need to hold that stock for a minimum of 1 year. And for some people, that's a long time, and they, have fun with Robinhood trading really fast and furious. That's fine and all. Just realize you're going to pay a higher tax rate. So what are those tax rates? Let's look at another chart here. And again, this is different for everybody because your tax situation may not be the same as somebody else's. You need to talk to your accountant. This is just kind of a general rule of thumb to give you an idea of what's going to happen if you sell stocks too quickly for a profit. So long-term capital gains. So if you hold a stock longer than a year, these are the general rates that you're going to pay for your tax bracket for what you're making. So if you're making $100,000 as a married couple, let's say, you're going to pay roughly 15% on the profits that you made if you held those over a year. Now, let's say you sold that stock shorter than a year, maybe within a few months or something. If you make $100,000, you're going to fall into this bracket down here, and it's going to be a 22%. So you're paying 7% more tax because you didn't hold it long enough. And again, everybody's situation is different. These numbers aren't going to be exact, but it gives you a rough idea. And the higher you go up in the tax brackets, the more you're going to pay in short-term capital gains taxes. And so it can add up quickly if you're a heavy investor. But most people that have that amount of money have somebody that's helping them manage it, or a really good accountant, and they will make them aware that, hey, you need to hold on to these a little bit longer if you're in profit and you really want to get rid of them. So that's my quick spiel on the number one issue that I think kind of Robinhood users gloss over, or they don't even realize, is that you're going to pay higher taxes on short-term capital gains by not holding those stocks for longer than a year. If you have any questions, comment below. I'll do my best, but again, I'm not an accountant, I'm not a lawyer, so there's certain questions I really can't speak to because there's all kinds of different scenarios where people ask, well, I'm trading out of this type of account versus this one. What about this situation where we're married, but we file independently? And there's too many situations for me to address obviously you need to talk to your accountant. But this has just been my quick kind of video to make you aware that you need to pay attention to these short versus long-term capital gains taxes. I know it's not a fun topic, but I just wanted to throw it out there. And then I always want to remind you, I have a Robinhood course available. If you look in the description below this video, there's a whole bunch of other Robinhood videos I want you guys to check out that are free on this channel. And then, as always, comment below, do my best to answer. I'll talk to you guys later. Bye.
Hey, Greg here from WealthFi. If you haven't subscribed yet, go ahead and click that icon right in the middle and you can continue getting content like this. I'd also love it if you'd leave a comment below this video. I do my best to respond to all of them. And lastly, thanks for watching.